All right, we're back. Tasty Crypto Show. I'm Ryan Grace. With me today, the one, the only, Shelley Van. Shelley, what's up?
Hello, hello.
How you doing?
Good, thanks. How about you?
Can't complain. We're here. We're working for the weekend, so I would love to know what you're getting into this weekend. Chat as well. Get your ass over to YouTube if you're not watching it over there. Type some crazy stuff into the chat. Let us know you're alive. Let's get it going here. Shelley, what are you doing this weekend?
Not anything planned, really.
It's going to be like 75 on Friday.
I'm going to be outside.
Partying, hopefully. Okay.
Yeah. What are you doing this weekend?
I'm heading out to South Carolina for a wedding, so I'm off for a couple days. But fear not, we will still send the email Saturday morning.
Yes, we will.
Yeah. Got to pump that a little bit. If you're not a subscriber to, how do we bill it? Or we used to bill it as the best crypto email you've never read. Mm-hmm. It's been growing. The list has. So some people are reading it. But if you're not an avid reader of the Tasty Crypto newsletter, next to Orange on Saturdays in our midweek market update, sign up over at tastycrypto.com. That's a little commercial for the beginning of the show.
Well done. Well done. We got some friends in chat.
You have a question for the chat?
I do.
All right. What do you want to know?
What makes you belly laugh? Like unreasonably laugh?
Getting tickled. No, that was weird.
It'd be creepy.
Yeah, just the first thing that popped into my mind. Sorry. What makes me belly laugh? I don't know, like a good stand-up comedian.
Okay.
You know, post like a little gummy action maybe.
All right.
Need a little amplifier sort of thing. I don't know. What about you?
People falling. Shameless.
Like an old woman tripping off the curb sort of thing? Like that's hilarious?
Nobody getting hurt is funny, but like, you know, people who eat shit just like because they're clumsy.
Okay.
Or like getting, you know, a dog.
Like slipping on the banana peel.
Yep. And cats. Funny, like cats getting startled.
Okay.
Golden.
All right.
But chat, what makes you laugh? My mom, Laura, people falling down. Yep. Maybe that's where I get it. What's up, Grumpy Mike? Crazy House. That's a good name. Jose's here.
Ben Butler.
Tickled is a horrifying documentary about the sport of competitive male tickling. 5 stars.
I know what Demi's talking about. I haven't seen it, but I have seen like the thumbnail. I don't know if it's on YouTube or Prime or whatever. I do know what you're talking about, though. I think it has some weird twists and turns.
Yeah, we'll save that for another show.
Yeah, that's your homework. Watch the Tickled documentary we'll discuss on Monday. Let's get the show started. Shelley, you're in the driver's seat. What do you want to talk about today? We've got new tokens. We've got liquidity pools to cover from last week. We've got markets chopping around here. Happy to go anywhere. What do you want to do?
Let's start with the new tokens.
Okay. Slides, please. Loading. Boom. We've been adding new tokens. tastytrade, I should say, has been adding, not necessarily me or we, but this business.
You get a lot of the credit, though.
I help to push some things forward at times. But tastytrade's been adding new tokens, going to continue to add more tokens. And we've talked about some of the recent additions. I want to cover really quickly two that I think are interesting. Personally, I've had investments in previously, so full disclosure, I'm not really here to pump my bags. They're not big enough to pump, I suppose. But these are two that have been on my radar for some time, SUI and Aptos. We've added a bunch where it's hard to know the differences between some of them at times, right? On one end of the spectrum, we've got memes, we've got Shiba Inu, Doge, Pepe, and then on the other side of it, we've got, you know, monolithic L1s. So there's a lot in between as well, but I want to talk about SUI and Aptos. Are you an investor, trader, participant in either of these tokens?
You know I am.
Absolutely.
I traded SUI a little bit a couple months ago, made a bit, and then was pissed that I sold too soon. So I bought back in, you know. And I just bought Aptos recently because relisted them. I was like, ooh, I'm not familiar with that one. So I aped in, as I do.
Awesome. Hey, it's a good way to have some skin in the game and to maybe force yourself to learn a little bit more about them if you've got it on your watch list, you've got it in your portfolio. Throughout the past couple of cycles, there's always a narrative or multiple narratives that emerge. And at one point, Solana was kind of deemed an Ethereum killer. Not necessarily true, but similar L1s. That was a theme. It was a narrative, at least. And you're starting to see something similar emerge again, where you have these other high-performance blockchains, SUI, Aptos, which we'll talk about, emerging as these kind of Solana killers. I don't think that's necessarily true, and we're going to talk about this in the email over the weekend. But I want to hit on these and kind of present them from that investment case. If you think that there are, real world use cases, clearly there are for Solana. There's utility there. There's users there. Well, you're seeing the emergence again of these other high performing chains, or these new high performing chains, I should say. So let's talk about those really quickly. Then we'll jump into the liquidity pool that we put together, talk a little bit about the markets. But SUI and Aptos, new tokens now available on the tastytrade platform. They're high performance L1s. They've both emerged from kind of the same place. That was Meta's Diem, also known as Libra, the stablecoin project that got shut down. They both use the Move programming language, so they're similar. That's the point here. They both also employ parallel transaction processing. We're not going to get too deep into the weeds, but that's the key takeaway. It's how they process transactions is what makes them unique.
So, quick visual. People standing in a line where the first one gets to go, second one gets to go.
Yes.
Versus
your bus stop graphic, not so much graphic, but the
right. So like
little app that we
you
showed.
have to wait in line for your transaction to process. These, it's like multiple checkout lanes.
Yes.
Where they're being funneled through simultaneously.
That's the best way, absolutely, I think the best way to think about parallel transaction processing. All happening at the same time, hence the higher performance versus sequential transaction processing. Not that it really matters for this show, but SUI uses something called object-based architecture, while Aptos uses what's called block STM. So just to touch on parallel execution, as you've already mentioned, this is the process of transactions being verified, being processed all together in parallel versus the way that most blockchains do it, which is one by one. Solana is very good at this with proof of history. It can order things very, very quickly and efficiently, but it is in a sequence.
Right.
Through parallel execution, instead of waiting in line, like Shelley mentioned, many transactions are processed at the same time, just like having multiple checkout lanes at the grocery store. So that is the big difference here. That's what makes these special, in my opinion. We can just break these down really quickly. I think the examples help. So when we look at SUI's object-based architecture, it's similar to treating every smart contract, every asset on the blockchain like its own file. Instantly, it can process unrelated transactions all happening at the same time. The way to think about this would be if the SUI blockchain network, which is still relatively nascent, is used for blockchain gaming. You might want to buy a skin, buy a weapon, whatever it is. You don't have to just get in line and wait for someone else to buy something and that transaction to be processed. Everyone can do this at the same time. So that's one way that you might think about it. If we look at block STM, very similar, same concept. What makes this special is that it's smart. So when you look at DeFi, you could have a DeFi platform. You have all these different smart contract interactions that are all happening in parallel. But there's certainly a chance that you could have two parties, two actors that are trying to complete the same transaction at the same time. This is smart enough then to let everything else kind of happen and then solve that problem on its own. So if you look at these, they're largely they're very similar, put it that way. But I can kind of look at this as like, okay, SUI, better use case or one space where, it might be optimized is blockchain games. Maybe you look at DeFi as something that Aptos is better suited for. Not necessarily, still very, very early. But again, the big takeaway here is just how they process transactions versus a lot of the layer ones that we're familiar with today. So that said, just really quickly, a comparison between SUI, Aptos, Bitcoin, Ethereum, and Solana. You can just see how much smaller they are in market cap terms versus Bitcoin. Of course, you can see that nothing has done very well this year from a performance perspective, Bitcoin's down, but not nearly as much as some of these other tokens are down. And then when you look at relative performance versus Ethereum or versus Solana, SUI and APT have done a little bit better versus ETH. Solana still leads if we're trying to say that these are ETH killers. Well, not so much in performance terms. So
I like this laid back trader says people don't really care. It just needs to be fast and cheap.
Absolutely. Yeah. And again, I mean, it's still very, very early. I don't think it's a world in which there's a single chain or winner takes all. You probably have a multi-chain world. Maybe they work together, maybe they don't. But you probably see the emergence of certain use cases that rely on certain blockchain networks and their relative technology versus others. ETH is good for certain things. Bitcoin is good for certain things. Solana is better for this. SUI, Aptos might be where these things happen. Still very, very early, but wanted to cover that here today as these are new tokens at tastytrade. We got that over with. Where do you want to go next? Unless anybody has any questions that we can possibly answer.
In the pools.
Okay.
And Jose laughs when people crash on a glass door. Also hilarious.
Okay.
Or like the screen door, you just don't see it. Have you done that?
I've never done that. No.
Oh, I have.
I've seen it done.
It's magical.
Yeah. The glass didn't break, did it?
No.
Okay, that's good.
It's just smashed face,
I've seen someone go through the screen. I mean, the screen completely comes off the tracks and, smashes on the ground. But I've never seen the glass door
Yeah. Not like break.
break. Yeah.
But when you just
Yeah.
or push on the pull and, yeah.
Let's talk liquidity pools. If we could throw up our browser here, we'll jump over to Uniswap. If you recall, last week on the show, Shelley and I put together a small liquidity pool to show how to do that in the tastycrypto app. Connect to Uniswap. You need, in this case, ETH and USDC. You put them into the pool, and then, you basically just track the process or the progress. So that said, Shelley, we set up a pool with about $300 of ETH and USDC, and now we're going to take a look at how we're doing. Which, these are not giant numbers. I get it. $3 is not much, but this is a 1% return pretty passively, really, on a 1 week basis. So if you extrapolate that across a year, you have an annualized return that's quite a bit higher than what you might get in a checking account for sure. It's going to be a lot more volatile. You can see the current APR, and this is going to be a function of the price of Ethereum as well, as that's going to be quite volatile. You're going to see these things move around. Current APR, as of this moment in time, since it's been calculated, is 26.3%. And you can see our range here is 1850, 2244. But we can jump into this. We can talk more about it. This is the pool that we set up, though. You can see it's still a little 50-50 or close to 50-50. So we started with 50% USDC, 50% ETH. And I have a little bit more ETH in here now, which means that the price of ETH has gone down a little from where we started.
Can you toggle and show the price range in USDC?
Yes.
So it makes sense, makes more sense. Yeah. So that's your range. How are you keeping track of your pools? Like, just quick, what did I go in at? How much did I pay for the ETH when I put it in? Like, your profits and losses. Like, how are you keeping track of that?
Yeah, the easiest way to eye that up is just simply to look at how much of each asset you have in the pool, or you can see where it is here relative to the range that you're in. So typically you're going to come into this, at least when we did this, and we would put it on where the top of the range is about equidistant away from the bottom of the range. Or if I say that differently, you're the same distance away from the current price when you put the pool on, when you set your top and you set your bottom of the range.
Came in at the middle.
Yes.
Yeah.
And then we can see how that's moved just given how much more or less of one token we have in the pool. So if we come in at 50-50 and we see that we have more ETH than dollars, or we have 57% more, to me, that signals that the price of ETH has gone down because my pool has been buying ETH. People have come to the exchange, they're selling ETH, they're buying dollars. We're facilitating that process. We're making a market, or we're participating in the market making process. It's automated through the AMM. But I know just by looking at that the price is a little bit lower. I'm not too concerned with how much it's moving within that range. More so, I know when I'm out of range, if this price instead of 2006, is below 1850, I'm out of range. I'm 100% ETH. I know I've lost money.
Right.
Because I bought ETH as it was going down and it went lower. And then if it's at 1850 in terms of the bottom of the range, but the price of ETH is at 1800, 1700, I'm going to keep losing money. The risk here, and this is very similar to selling a put in options trading, the risk here is that I've seen my pool go to 100% ETH from where I started, and then ETH goes to zero. So that's ultimately the risk. And then on the other side of that, if I see that the pool is out of range, I'm going to see that, one, just given there's an indicator here and the market price will be above 2244, I'll be 100% USDC. No problem there because I made money on the appreciation of the ETH as I was selling out of it, as the pool, or the price, I should say, moved closer and closer to the top end of my range. But there is an opportunity cost associated with that. So that's also a risk. That's very similar to selling a call option and taking assignment of the stock, or I should say selling a call against stock that you own is probably more applicable because you would be getting out of the position. So I no longer have any ETH. I can't participate in further upside. I now just have dollars. And so if the price of ETH goes from 2244, where I'd go out of range, and it goes to 3,000, well, I missed out versus if I just owned ETH at 2,000 and I wrote it up to 3,000.
So when do you pull out all liquidity and either start a new pool, add to an existing pool? Like, how many pools do you have going, and what is your strategy there?
Right now, I probably personally have 7 or 8 pools that are going. A lot of them are out of range because they were started at higher prices. So I guess it depends on what's happening in the market. It also depends on your directional bias, or are you bullish or are you bearish? So in the case that we have a market that's trading higher and you think that it's going to continue to trade higher, what I'll often do as that pool goes out of range to the upside is that I will sell some of the ETH, or in this case, I'll take some of the fees that I've collected and sell that back into USDC. And so I will take some of it. So I'll kind of almost like trade it a little bit. So I want to capture some of the profit. And now I know that if I started with, we'll just arbitrarily say I started with a $10,000 pool, 50% ETH, 50% USDC. The price has gone up. I'm selling out of ETH at higher prices. I will put on a new pool as long as I'm still bullish, check the charts sort of thing. But I'm not going to come in with the full amount considering that price appreciation. Maybe I've made $500, $1,000 on that $10,000 initial trade. Maybe ETH goes up 10% or whatever. I'll come in and set up a new pool at the new prices, but only use $10,000 worth of capital. Keep the other on the sideline and use that, in some ways as a downside buffer, but that was the trade. So you made money on the ETH appreciating, but when you go to put this back on, don't increase your risk. And now I have a pool that starts with $11,000 or $12,000. I'm still coming back in with a $10,000 pool at higher prices, but I've made some money that I'm keeping on the side. I'm also taking the fees out and keeping them on the side as well, keeping them in the wallet. On the downside, I don't really do much. Hope and pray, if that's a strategy.
It's currently my situation.
Right? So you get these big swings. We're used to it. But ETH goes down 30%. You're out of range.
Right.
If you want to rebalance because you think that there's no chance it's going back up and you're just going to chop sideways, you want to generate fees, you can do that. But you've been buying ETH on the way down. Now you're selling the bottom to swap that back into 50% dollars, 50% ETH so you can put the pool on again. I typically don't do that unless it's something where we're very close to the bottom of the range and I want to continue to participate in this market making process. Maybe I come in with a wider range. There's a lot of different ways that you can configure it, but I typically won't sell out at the bottom. Now I'm 100% ETH. I'm at a level where if I think it's going to bounce, I just want to be long ETH. If it bounces, we get back into the range of that pool and it starts to make markets again or facilitate the process, provide liquidity.
So on the way down, though, if you are 100% USDC, couldn't it be pull it all out, buy more ETH, and throw it into the next tier.
You would, on the way down, you would never gain more USDC because the price would be dropping.
I said that, I said that wrong. Wouldn't you take that ETH out and then put it into a pool that's the higher tier up? Meaning like you've set another range that's now in range for a pool.
Oh, if I had...
Yeah,
you could add...
Basically like shuffling your pools.
Yeah, absolutely. If you had kind of staggered these or you had them laddered in some sense, and that would assume that lower level pool was out of range when this other one was in range. Now you have more ETH. When you put this into the pool, you have to have a subsequent amount of USDC too.
Right.
So that also probably assumes that you have some USDC on the side. But absolutely, you could increase the size of those pools. And through this, you'll see that you can add liquidity. So on the screen here, we've got the ability to add more liquidity. So if I had another $100 in USDC, $100 in ETH, and I want to size this up to a $500 pool, I can do that just simply by clicking add liquidity. It'll ask me how much I want to add. If I want to remove all the liquidity within a couple clicks of a couple buttons here, we can take out the whole pool itself, 301.66, and the fees at the same time, all in one fell swoop. So you can manage it that way. Or, the other thing that you could do, let's say everything's working perfectly. This thing's just chopping sideways. You got a great pool. It's running hot. You've got all these fees. You might want to keep this going. You could be 50-50 and have $100 worth of fees. Collect your fees, put them back into the pool, compound those returns. So there's a few different strategies here, but when you get those big volatile moves, and that's what you're up against, right? You're implicitly short volatility, but you want a lot of trading activity. That's a great environment when it happens, but quite often when volatility shows up, you get these big moves that push you out of range. And so you do have to kind of battle with that a little bit, and that is the risk here. But in an environment where it's just chopping along, and we've seen that. I've seen it where it's done that for months at a time. Good example of that was probably the period almost from March to August, March to July of 2023. I mean, markets were just kind of dead, going sideways, and really we didn't see much change until probably October, November of 23, and then we got the ETFs in 24. But that period was fantastic for liquidity pools, even though it was an extremely boring and semi-bearish environment for markets.
You're making your ETH work for you.
Absolutely.
So are you also staking ETH?
Not really. No. I mean, I have some staked ETH, but most of what I'm doing with ETH is in liquidity pools where I'm just long. You're long when you're staked, but I'm just doing more with it on Uniswap.
Lone Sophos has arrived late. Hello.
Welcome.
And Edward, Hope and Pray, I think that's called HODL. Yes, diamond hands.
Yeah.
These are sparkly.
Yes.
I have held a lot of things.
Everyone thinks about that on the way down, though, but it's much harder on the way up, especially when you have the volatility that's associated with some of these assets, because that's where you make your money. It's not so much like, okay, can you withstand the downturn? Sure. A lot of people do that just simply because we're stubborn, but it's on the way up, right? It's really the exercise is not selling too early, given the volatility is greater on the upside. And it's hard because that's not how traditional markets trade, at least equity markets. And so that's where I think, diamond hands matters. And I suppose that's where it always was, and, what it is really referencing when you go back to holding the upside in GME or AMC or something like that with the meme stocks. But yeah, that's probably the hardest thing about crypto is timing the upside. It's not so much like picking a bottom. It's, do we get out here at this pretty significant, short-term move, or are we holding for something bigger? And then you get burned doing that too,
Oh, I know.
Yeah. Well, that's going to do it for our show. Shelley, thank you as always for coming on here and joining me on the show on Wednesdays. We've covered a lot. SUI, Aptos. Make sure you check out the email this weekend for more on those tokens and some of the tech behind it. We will continue to put some guides together and do more shows on liquidity pools. We've got some cool features coming to the TastyCrypto wallet app as well to help make this easier for everybody to do.
And we have a big reveal on Friday on Beans.
All right. Tune into Beans.
9 a.m. Central.
Only on TastyCrypto.
That's right.
All right. Yeah. If you're not following us, subscribe to TastyCrypto and make sure to check out Beans. And when you tune in, smash that like button. as they say.
Like and subscribe.
Hell yeah. That's going to do it for our show. I'll be back next Monday with Shelley. Shelley will be back on Friday with Beans. Don't miss it. Victor Jones is up next with The Price of Truth. Until then, I'm Ryan.
I'm Shelley.
Peace.